Today's subject is all about money, one of my favourite subjects. I like money, I like how it can work for us, but more importantly, I like how you can get money to create more money for you. Now, the majority of us trust banks and financial advisors with our money, but is this actually safe to do? Today, I'm joined by someone whose mission it is to shed light on what the financial industry doesn't want you to know about investing. After spending his childhood in a poor village in Slovenia, he worked hard and became a successful entrepreneur. And he did what most of us do. He trusted money to financial advisors, brokers, and gurus. Then the unthinkable happened. He lost it all. After this, he dedicated his time to investigating the financial industry, and he made some shocking discoveries. With that knowledge, he built a successful portfolio that works to put money in his pocket, not the financial industry's. He is also an international best-selling author of The $1 Million Decision and a renowned public speaker. He joins me today to share his knowledge and help you avoid the costly pitfalls that often come with investing. So let's get stuck in and welcome to the show, the incredible Robert Rowley. So welcome to the show, Robert. It's nice to have you come and join us. I've seen you speak before, and I was at an event that I hosted with Najahi before that I know that you were speaking at their previous virtual event. But it's nice to get a chance to talk to you myself rather than listen to you work your magic. So do me a favour, do everyone a favour, give us a 1-minute elevator pitch about who you are and why you're here.
Well, I help people to avoid the biggest mistakes in investing, and I think that the biggest mistake is trusting their financial advisors. So that's basically it.
That's an interesting thing because I come from a financial services background myself. I own a wealth management company. I'm definitely into alternative assets and arbitrage trading and crypto trading and stuff like that. I've kind of like engrossed myself in it. And maybe that's because I understand the language. And so when it's spoken about, it's something that resonates easier with me. But I would say that the vast majority of people really don't either have a good money mindset or really understand money and how it works and how it can work for you at all. Is that what you found over the years?
I was in the same situation, at the start of my career. I lost a lot of money because I didn't have a clue how to manage it, how to invest it, and I just trusted my financial advisors and money managers. So basically, I made a lot of money in business, but then I lost most of it because I didn't have a clue how to manage it, and I just outsourced that to other people who later I found out that basically they didn't have the same interests at heart as me.
The funny thing about it is though, Robert, is that everybody wants the benefit of money. Everybody wants to have more money, an abundance of money. Everybody wants that. Not many people sit down and say, yeah, enough is enough. As long as I've got enough to cover the mortgage, I'm happy. Most people want more, and that leans into that human instinct of greed, doesn't it? But when it comes to more, it's almost like we condition people to think they should get rich slowly, but people want to get rich quick. And we've seen that with cryptocurrencies rising over the course of the last few years and retail investors getting into that space. So when you, back in those days, when you didn't understand money and you trusted a financial advisor, were you completely naive and you just said, right, you know your subject, I don't, you get on with it? Is that how it happened?
Basically, I gave them my business profits. I knew that I should invest my money for pension, for my family, for children's education, and stuff like this, But I didn't know how. At that time, I was totally financially illiterate. And if you gave me something to do about numbers, I just said, oh, no, that's not for me. Just stay away. I trusted these guys and I said, you just manage my money, like you think it's the best, And I thought that they are doing that well. But after years and years of doing that, finally, when I checked what is going on with that money, it was already mostly gone.
And how did that make you feel?
Well, I was not really happy. It was this was really a depressing period of my life. I totally lost my motivation to work in my business because you're working hard weekends, nights, and so on, and then all the money that you earn, it's gone. So it was really a hit, and for a couple of years I just couldn't get myself to to really work in a motivated way again. And but I was really lucky, I knew Brian Tracy, one of the biggest names in the personal development field, and we organized a couple of events with him. After I lost that money, we already had an agreement with him for the next event, live seminar with him. And after that seminar, I asked him if we can go to dinner together because I had these problems and I couldn't find a way out. So he was the guy, he was the person who gave me the key push. At this dinner, he said something that totally changed my life. Robert, it doesn't matter how much you earn. All that matters is if you have the skills to manage your money and to invest it. And at that moment, I realized I don't have these skills. I blindly trust my financial advisors, and that was the turning point in my life because after that, I started to do my own research. I started to attend investing events. I started to read books. I read more than 300 books on this topic, in the next years. So it was really a start of my journey into this financial world.
So it's obviously, you experience pain that's big enough, and then you take action because of it. And I suppose that pain.
I really hit the bottom at that moment, and I think that this was in hindsight, this was a good thing, that happened to me because if this didn't happen, if I didn't lose that money, I would never get into this field, I would never be where I am right now. So it was a blessing in disguise.
When I was a young boy, a young man, I was a salesperson in London selling office equipment. So I was trained to sell photocopier machines and stuff like that. And I was earning good money, thought I was kind of semi-successful as a young person. But I was never earning more money than I could spend. I always at the end of the month was just scraping by at the end of the month. And I sat down with a guy called, believe it or not, an Irish guy who has the most Irish name possible. His name was Seamus Murphy. And he was an old guy in the office, and he was always really wise. And I sat down and I said, Seamus, how do you earn really big money? Well, what is it you have to do to earn really big money? And he said to me, Spencer, the way that you earn really big money is to work and learn all about money. Make it your life's work to understand that, because when you understand it and you understand what really goes on, then you'll be able to take advantage of it. You're finding similar?
Yeah, in my book, The $1 Million Decision, I also talk about my financial success formula. Where if you want to be successful in life, financially successful, you need to have two set of skills. The first set of skills is money making skills. So first you need to learn how to make money, for example, in business. And then the second set of skills that you need is financial skills. So you need to be financially literate, you need to be able to manage your money properly, and you need to be able to invest that money profitably. But you need both set of skills, because without the first set of skills, without money making skills, you will never have enough money to invest. And without money management and investing skills, even if you make a lot of money, like for example, Mike Tyson, he made 500 million in his career, but then he lost it all. He went bankrupt because he didn't have the money making and investing skills. And that's the key. You need to have both set of skills in order to be financially successessl.
That's a sorry tale for so many sports people, isn't it? They say that within 5 years, professional footballers, 60% of them are broke. And it's really interesting. Yeah. Huge amounts of money coming through the door, yet they don't know what to do with it, or they're sucked into listening to other people that don't know what they're doing either, and end up broke.
Yeah, it's very easy, for some people, if they are in sports, they get lucky, they train hard and have a bit of luck because they were at the right time, at the right place and so on. So they really can make a lot of money. But after the money stops to come in, you need to have these skills. You need to have the money management and investing skills, because otherwise you will just spend, and nothing will be left in the end. And this is really, I read these statistics and they are terrifying, because a lot of people, it's like the same thing happens with the lottery winners. They get lucky. They earn a lot of money. Not the earn, but
Win.
they get they win a lot of money. But then they don't know how to manage it, and they just spend, and nothing is left in the end.
Now, a lot of people will say the whole world of investing is a minefield. There are so many different areas that you can invest, and some people say, I understand property because I live in a property, but I don't understand the stock market, or, I couldn't describe how commodities works, whether they're hard or soft. I don't understand I hear these terms, futures, options, swaps, warrants. It's just like a completely different language. And now crypto has come along, and it was difficult enough to understand Bitcoin, but then we had Ethereum and Cardano and Solana, and now we've got all of these altcoins. I mean, what even is an altcoin? And then, well, hold on a minute, I don't even understand what the blockchain is and what it does. Oh, no, now you're throwing NFTs at me, for goodness sake. What's an NFT? People don't even know what the word fungible means on a non-fungible token. And so I respect that for many people is really confusing. So how do we dumb that down for people in a way that is palatable and easy to understand?
Yeah, crypto is really a very interesting topic. And I think that it will do really well in the next years. Of course, it's very volatile, and you need to be prepared for this volatility. But I think that it's more risky if you are not exposed to this market compared to being exposed to this market. So I am exposed to this market. Also, all of my students, they are exposed to this market because I think that there is a great future in front of it. But if you invest in something, you need to understand that thing, So if you invest in stocks, you need to understand what stocks are. If you invest in gold, you need to understand how gold works. If you invest in real estate, you need to understand real estate. And of course, crypto is something that is very technical. It's a new technology. Sometimes it's very hard to understand what that is. But if I just dumb it down, if I just say in a minute what crypto is and what it's not, there are two things in the crypto space that you need to be aware of. One thing is Bitcoin. Okay, so Bitcoin is the biggest part of crypto, and this is digital gold. It's basically the store of value. We can compare it to gold, but it's a digital gold for new generations that is much, much, much more easy to use than gold. And that is why it's taking gold's market share. Every month, every year, it's taking gold's market share. And gold, in the last 2 years, where we have high inflation and a lot of money printing, gold basically did nothing. And historically, gold was the store of value. Historically, gold was an inflation hedge. But now this space is being taken by Bitcoin. So to understand Bitcoin, you just need to understand that this is digital gold, digital, store of value for the new generations, for the digital world. And we are living in a digital world, so very likely Bitcoin will outperform gold in the future, okay, with ups and downs, of course, okay? Nothing is certain, of course, in the investing world, but I think that there is a very, very high probability that Bitcoin will vastly outperform gold, So this is one thing that you need to understand in the crypto space. And then the second thing that you need to understand in the crypto space, if you just want to scratch the surface, is infrastructure crypto projects or infrastructure blockchain projects. And this is like, Ethereum and Cardano and Solana. So how can I explain this in a very simple terms? These are like utilities for the real world, roads, electricity, internet access, and so on. So these are basically platforms, just like operating system for this blockchain world that is being developed. And when you invest in these infrastructure projects like Ethereum, Cardano, and so on, you are basically investing in the operating system where all the other, like Windows or Android for your phone, where all the other developers who are building apps, for this operating system are creating value, and these applications work on this operating system. So if all these applications, NFTs, decentralized finance, metaverses, virtual worlds, and so on, games, if they work on these platforms, on this operating system, then the operating system will gain in value. So the more this space is being developed, and it's being developed with amazing speed, the more valuable will these platforms or infrastructure projects be. So that is basically what you need to understand in order to understand the crypto space. It's Bitcoin, and then it's infrastructure projects, and then you have thousands of other coins that are not so important. Okay.
Interesting. So I heard a statistic the other day that the adoption of cryptocurrencies versus the adoption of the internet, and in terms of its speed along the way, then if we take mobile phones, they came along, the adoption was high, internet came along, and that was 10 times higher, the adoption of that, than a mobile phone. And now we have the crypto space, and the adoption of crypto is growing at an outrageous speed. The statistic I read said that 1.8 billion people on the planet within the next 3 years will be investing or have or own crypto in some capacity. When you consider a population of 7 billion, 1.8 billion is a big chunk of that population, isn't it?
Yeah. The thing is that this space is growing in an exponential rate. So, for example, if now we have, let's say, 300 to 500 million users, it's not like it will take 10 years to get to a billion. It can take only 1 year, because it's an exponential rate. The space has been doubling, in the previous years. So if you have 500 million users, the next year it will be 1 billion. And then the next year it will be already 2 billion, So it's an exponential rate. And here the Metcalfe's law comes into effect, And this Metcalfe's law says that the value of the network is the square of the number of users, So it's basically exponential growth. So if the network size goes times 2, then the value of the network goes exponentially higher, It's not times 2, it's maybe times 5 or times 10, So, and this is the important thing. So this technology, I really see a lot of future potential in this technology. And just like any other technology, in the beginning stages, it's very volatile. But when people say to me, Bitcoin is volatile, I say, yes, also the Tesla stock was volatile 5 years ago or 7 years ago. If you take a look at the chart of Tesla or Amazon in the past, when they were developing these companies and when they were small, it was like every month it went up 40%, down 40%, up 50%, down 50%, and so on. So yeah, of course it's volatile because it's new technology, and all the new technologies are volatile. So if you are afraid of volatility, then of course don't go into this into this space. But if you are a long-term investor, if you think in years and not days, then this volatility is amazing. It's good because sometimes when you, let's say, dollar cost average, this means that you invest in a specific interval. For example, you just invest once per month or twice per year or something. This just means that sometimes you will get a very, very good price if the market is down at the moment when you invest. So if you just dollar cost average into this market and if you just leave everything for years, I think that there is a very, very low chance that that you will not get amazing returns.
Really important. Well said. Now, nobody should be investing in anything they don't understand, and you obviously teach people to understand this kind of stuff. So before we go into that, let's just talk about money, because we see interest rates are almost all-time lows. You can borrow money now at less than 1% if you want to buy a house. If you're getting 0.5% in the bank, you're lucky. We see inflation sitting at something around 3.5%, which means money in the bank is just going backwards. It's going down in value
and
in front of your
eyes. That's just the official rate.
Yes.
Unofficial rate, the real rate, it's probably all around the world. It's approximately 5 to 10%, I think. I just saw the news yesterday that the electricity is going up. The price of electricity in Italy, where already the electricity was very, very expensive, it's going up 30% now.
30%.
It's like 30%.
Wow.
It's going up for 40%. And electricity is already very expensive in Italy. The same goes for all around the world. The inflation is not transitory. It's, people are feeling the increase in prices all around the world. Of course, if you take a look at just the official rate, it accounts only for the food and clothes and stuff like this. But you need much more than food and clothes for a living. So the real estate market, investing, if you want to invest something, everything is going up with much higher rates.
It's interesting. It's interesting when you look at this because for me, people don't always acknowledge that the banks or the government, keep printing money. And so if there's more and more money being printed, then there's less and less value to that money, but it keeps getting printed and people almost turn a blind eye to that. And what they have to remember is that in 2008, when the financial crisis happened, it happened because the banks messed up. It wasn't the general public that messed up, it was the banks. And some people sat there saying to themselves, this isn't right, there's got to be a better way. And that's how cryptocurrencies evolved in the first place, or started in the first place. It was someone saying it's got to be, just like with cars with Uber and Airbnb, someone said there's got to be a better way. And so when that better way came about, what we then saw is people going, well, I'm not sure about that. And then you saw the regulators saying, well, I'm not sure if that's fair. And regulators, like with China the other day, trying to oppress cryptocurrencies being bought and sold. And it's fascinating to see the people that caused the problem in the first place then had to accept that there was going to be people trying to find a solution. And when people then find a solution, and then those same people are going, oh, we're not happy about that solution. And it's all about the governments and the banks trying to control everything and not put their hands up and say, we messed up, we got it wrong, and we want to put it right. But they're like, yeah, okay, well, it went wrong, something happened, and we're not going to allow you to do it. Do you agree with me on that point?
100%. And if I just take China as an example, they needed to ban cryptocurrency. Why? Because they are trying to fight against the dollar standard with their digital currency, and China has a long history of making the wrong moves with their monetary system. They, for example, they went to gold, they went to silver standard couple of 100 years ago, when gold was basically failing, and they created a huge mess in their economy at that time. So China, they are trying to promote their digital currency as a way how to prevent people to get money out of that system that will fail, of course. They are trying to ban crypto, because they know that people who are financially literate, they will try to get money out of their digital currency that can be printed, like this. And they need a closed system. They need a closed system. So that is why they are banning everything, technology and so on. But in the long run, this cannot work. Technology always wins. And of course, they can have some kind of totalitarian system. And this, of course, will work for the political elite there. It will be terrible for the people there, of course. But in the free world, technology will win. There's no way around it.
Interesting point. Now, after your experience of working with a financial advisor and losing your money, you then went out to learn about it. And I feel like you're on a bit of a mission to teach the world how to understand this kind of stuff, to teach the world to be a better investor. Individuals from the man that's got the working class job that's doing the manual labor, from the guy that's sitting there working as a lawyer, to the guy that's sitting there running big businesses as an entrepreneur. Everybody needs to learn how to invest their money more cost effectively, more efficiently, to get a better return and essentially get it working better for them than it worked for itself. Would you agree with that?
Yes, certainly. When you learn how to manage your money, how to invest it properly, everything changes in your life. Everything changes. I have so many stories from my members, my clients, who have turned their life around by just learning these things, because Let me just give you one example.
Please, yeah.
I had a member of my course from Canada who was investing with his financial advisor guide, and he was investing in mutual funds. These are for so just to explain what these are. These are the baskets of stocks. This is a financial product that has a basket of stocks that invests in a basket of stocks, but the commissions and fees are very high, and also the financial advisor also, on top of these high fees, he added his own fee. So basically, he was investing for decades in a very high commission product. And in addition to these commissions and fees, he was paying additional fees to his financial advisor. When we made a comparison, what would happen with all that money that he invested in, the difference was more than 1 million Canadian dollars. So throughout his career, he spent almost $1 million Canadian dollars just for commissions and fees, and that's terrible. That's terrible. And most people are in the same situation. They don't even know how much money goes out of their investment accounts through commissions and fees. And
okay, but there's a couple of perspectives here. Okay, so we've got to understand this.
Yeah.
There are people that don't want to learn and just want someone to deal with it for them, and you're never going to convince those people, are you? If they don't want to learn, they just someone get on with it. It hurts my head too much to do so. I'll live with the fact.
But the funny thing is that you can learn these things in one day. You don't need a PhD in finance to learn how to invest in the low-cost financial products. That's the thing, You can learn this in not in one day, but in a couple of hours. I can just show a couple of charts, a couple of comparisons, and show a couple of products that are good and that are bad, and compare them, and you know everything.
Interesting that you say that. Then there's people out there that really need to learn. They need to take control. There's a lot of people out there that have what I would say is a poor money mindset. I'll give two examples because I know typically who you probably work with here. I've got two daughters. My youngest is 19, my eldest is 22. My 22-year-old I would describe as a miser. She wanted to buy a house, and I'm like, okay, well, you save up for the deposit, and for every pound that you save, I'll match £1. And so I spoke to her after her saving for about 18 months. And bear in mind, she's at university. And I said, how much have you saved? How much have you got up to? She's like, yeah, I've done really well. Now, I'm expecting her to save £5,000 or £6,000 because I was going to match it. She said £32,000. I was like, you've saved £32,000? She's like, yeah, Dad. She said, I opened up a crypto account. I bought Bitcoin right at the beginning. And I'm the guy that should know more about finance than her. She'd taken it seriously. She got committed. She said, and for that £30,000, Dad, you need to match it. So I need it. And with that money you give me and that money I've got the deposit for the house. And I'm like, get in. Amazing job. Well done. Then there's my 19-year-old daughter, who, no matter how much money you put in her hand, okay, by the end of the day, that money's gone. And she's got no comprehension of that. And for her, learning about this kind of stuff is really, really important, because for her, she to me is a typical person who's going to suffer from running up credit card debts, get themselves into financial difficulty, and that's just not a great place to be. Now, they're both great people, but the money mindset is different. The thinking about it is different. And I suppose that's what you do, is teach people how to understand it in a smart and sensible way to get their money to create more money for them, right?
The funny thing is that I had a very similar situation with one of my participants, where sometimes I have live courses and sometimes I have online courses. In the last years, it's mostly online courses. But when I had live courses, I had a participant who was a business owner, and he brought his 3 children to the course, all of them teenagers. And he said that before the course, he thought that they will be just bored, to the death, and they will not learn and so on. But in the break, he came to me and he said, Robert, I cannot believe it, my 3 teenagers, they are listening to you. They are writing down things, I simply cannot believe it, it never happened. So yeah, if you teach people in the right way, if you make it simple, if you make it important, then they can learn a lot, But if you make it boring, if you use a lot of technical terms, if you are explaining things in a way where they don't understand, then it's boring and they don't learn. So it's important the way how you teach people.
Okay, well then let's go into that then. So what do you teach people? What do you teach? If I came to one of your webinars, seminars, courses, coaching programs, whatever it may be, if I came and sat there and learned from you, what would you teach me?
So the first thing is the general financial literacy. This is like personal balance sheet, your income, your expenses, your assets, your liabilities, and stuff like this. So just to understand how money works, how your personal balance sheet works, I teach about my financial success formula, how to make more money and how to invest it how to have the right mindset about investing, how to avoid the big mistakes people make when investing money, how to avoid scams, because there are a lot of scams around us. And then I teach how to invest that money properly, how to choose low cost investment products in which asset categories like stocks, bonds, precious metals, crypto to invest and why, and how to allocate your investments. How much money to put into stock market, how much money to put into the crypto market, how much into bonds, how much into gold, depending on your age. Because when you are 30 years old, your allocation will be totally different to when you are 60 years old. So when people attend my courses, they get the total solution. The financial education, what to invest in, why to invest in these asset categories, and also the asset allocation. So basically, they get the complete solution.
So what do you think are the three biggest mistakes that people make?
Well, the first mistake definitely is that So the first mistake would be that they don't even learn about these things. But this is, a general mistake that we already covered. But then, when it comes to, for example, when it comes to investing, one of the biggest mistakes is that you don't understand the effect of commissions on your future returns. So I call this the dark side of compounding. So small fees can take away most of your money in the future. So if you are paying small fees, and for most popular financial products like mutual funds and whole life insurance policies, they have very high fees, and these fees will basically eat most of your money in the future. So this is one important thing. And then the second important thing is you should really avoid all of these scams, because a lot of people they don't have they have some money to invest, but then they invest it into some shady products or very aggressive products where they don't even know where this money goes, and then poof, it's gone. They find out that they have been investing through a offshore investment company that is nowhere to be seen right now. They just disappeared from the face of the earth, and their money, of course, is gone. They click on some online ads for binary options or crypto robots, robot trading or stuff like this. And of course, most of these things are scams where they just part you from your money. So avoiding these scams, realizing that most of the things that are around you are scams and are just companies that are not that they don't exist. They are just trying to get your money. These are a lot of criminal organizations are doing just that, and I have a lot of people writing me with stories, how they lost their money. So that would be a couple of big mistakes.
And when people think about money, I think that what I've learned over the years being involved in finance is that people don't always have an end goal, and they don't work towards an end goal. So a lot of the time, because there's no end goal, it's just more or better. And for me, I think that if you know what you want your outcome to be, it's much easier to work towards achieving it and realize whether you can, within the risk tolerance that you have, or you cannot get to that point. And so, I don't know, take some simple things like retirement planning. We know officially it's around about the 65-year-old mark, but people forget that when you're 65, you still might live for 30 years. And if you might live for 30 years, you've got to have enough money to last you for 30 years. You've got to have your money providing you an income for a long time.
A rule of thumb, if you want to have, let's say, a certain amount of annual income when you retire, you need to have approximately, so the money that you take out of your pension every year should be around 4 to 5%, not more. So, for example, if you have 1 million in your retirement account, it's safe to take out 40 to 50,000 out of that retirement account every year. And this means that if you have a proper asset allocation, that you will be able to live indefinitely with your pension still intact and producing this kind of annual income. So 4 to 5% would be a good rule of thumb.
Yeah, it's very similar to what I say. So I say you need 20 times the income you
20
need.
times your money.
Yeah, 20 times your money is the income you need. So whatever you need, and again, the impact of inflation will make that number much bigger. So I don't know, you take, if you needed 100,000 as an income, you'd need 2 million today. But in 20 years' time, that's actually 4 million with inflation, just at a conservative rate. So you've got to take inflation into consideration. So once you've got that number, including inflation, then there's a goal, there's an objective on a date. And I just like sending my daughters to university. I knew when they were 18, I needed to have a fund of money for each of them to fund their university. So knowing that goal made it easier for me and made me want to learn more. And I don't think people always think about that in as much detail. Tell me more about details around the course, because I want to share with people the kind of stuff that's really important to learn. You've told me that we're going to understand budgeting and how we understand our money. What are you going to teach me? If I come and sit on a course with you, what are you going to teach me about crypto?
The first thing is what crypto is in a more detailed way, but in a very simple terms. And then why do I think that there is a future, for a bright future for crypto? How this technology works, and why this technology can go mainstream, and why it can take a nice market share out of some traditional industries. And then also what to invest in, how much money to put into Bitcoin, how much money into the blockchain infrastructure projects like Ethereum, Solana, and so on, and how to allocate this money depending on your age and your risk appetite. So you get basically the whole solution, the entire solution. And then after my course, you just do it, and that's it. So you need to understand what are you investing into, and you need to understand exactly how to invest, through which crypto exchanges to invest, how to take care of the safety of your investments, because safety is really important here. Because there are a lot of hacks, a lot of ways how you can lose that money.
Yeah, that's really important to speak about. I had a cryptocurrency security expert on the podcast previously, and he was talking to me about the importance of a hard wallet versus a virtual wallet, and how people don't realize how important it is. Also, there's some crypto exchanges are not as good as others. Some are more respected than others, and some actually are outright scams where they're taking on the spreads. They're taking massive fees as well on the spreads when you buy into those. But that aside, if I was a 40-year-old man that was going to retire at 65, and I wanted to be exposed to crypto and I'd come and learn how to do it, what percentage of my portfolio, considering the long term, should I have exposed to crypto?
20 to 40% in my allocation.
20 to 40%.
20 to 40. 20 to 40.
20 to 40. Yeah. Okay, interesting. Now I've got a guy called Raoul Paul who's coming on the podcast next week, I think. And Raoul,
yeah, he is very into crypto, and he allocates basically almost 100% of his investable money in crypto right now. But there is a caveat there. He can do that because his net worth is very, very big. He has a very, very big net worth. He has hundreds and hundreds of millions of dollars to invest. And even if this goes down 80%, he's still perfectly okay. But most people are not in the same situation. So you need to take into account also the personal situation, where you come from, how much money you have, and so on. And also, are you okay with the volatility? So I could also say, put 80% of your money in crypto, but most people would not be able to survive the volatility, and they would panic sell sometime in the future.
Yeah.
And that is why I try to create a portfolio asset allocation in a way where you will not be scared out of the market, or you will not panic sell if something terrible happens in the market.
Well, it's interesting you said that. The reason I was going to say about Raoul Paul was exactly what you said. He's 99.99% in crypto, and he thinks he's underexposed. And I think his mainstay is Ether. But anyway, now that's the extreme. You're saying 20 to 40. I believe a lot of people would go, "Wow, that much." Because they would think that's a high amount. Do you get that kind of reaction sometimes?
Sometimes from people who have not gone through my courses, but when I explain why, and when I explain my logic, and when I explain what is this technology all about, and what are the niches, that this technology will get into, and so on, they start to realize that this is the future, that this is the future. For example, let me just give you one example. Gaming industry is huge, and crypto gaming is gaining ground right now. It's growing like crazy. And if crypto gaming goes okay, then also the infrastructure projects will go okay, because all the games are basically apps on that operating system, on these infrastructure projects. If you understand this, and this is just one niche, and then you have NFTs, then you have digital worlds, then you have decentralized finance, traditional financial services without intermediaries, without greedy intermediaries, and you have business applications. You have a lot of these niches that and just a few of them, if just a few of them go well, crypto will go well.
It's interesting you say that. Okay, a great way someone told me of understanding how big gaming is, as the example. He said there's more people are watching people play FIFA than are watching football live.
Yeah.
So more people are watching people play games on a computer than are actually watching people live on television and in the stadiums. And so to give that perspective, how big it really is, because I think, I've never played computer games. And so it's easy for people like me, 50 years old, it's kind of stuff we never got into. And so to be oblivious of it, isn't it? You don't know. And
I played a lot of games when I was a student. And before that, I played a lot of games, so I understand this niche. And that is why I know, and I also know a lot of people who are gamers, So it's a huge niche. A lot of people, basically, they spend 1/3 of their life in games, or in virtual worlds. And this is huge.
With the coaching that you do and the teaching you do you prefer to do it live and in person, or do you prefer to do it online?
Online. It's funny, but I see that online I can show my audience much more precisely, how to do everything step by step. Because if you are teaching, and if you have like a big screen with PowerPoint and everything, it's different. They need to see all the details and so on. But when I have when I share my screen and I just go through all the procedures, how to open your account for crypto, for example, and I just go click here, do this, and then I give my members the recordings also. They can just follow my guidelines, just press pause in the recording and just do the same thing, So it's much easier for my topic. It's much easier to teach this via online platforms and to give people the recordings, because then they can just do the same procedure. They can go through the same procedure watching the recording, and they are done in an hour or half an hour.
It's really practical, isn't it?
Yeah, it's really practical.
And I think that's important, though, Robert. I think it really is important that people can, because you can sit and learn about stuff and learn the theory, but if you're actually going through the process at the same time, it just makes it far more easy to work through, and then also own the knowledge as well.
Yeah. Well, one thing that I learned in my career is because I don't come from the financial industry, I can still understand how most people think about this field, and they don't know how to open accounts. They don't know what options to click there. They don't know how to go through the verification process, And when I give them these video guides where I go through the process on my own, and they can just copy everything, it's very simple, So I can still understand how most people think, and that is why I go step by step, And then people have no problem opening their accounts, funding their accounts and investing in stock index funds, for example, in crypto projects and in other financial products.
Okay, good. Right, here's a cynical person who's going to ask me this after this interview, so I'm going to ask it before they do. How do you make your money? What's going on? Well, you can't be on a crusade just to teach people to do the right thing. What's in it for you?
I have basically two big sources of income. One source of income is my business. That is, we are a business training company. So we do a lot of trainings in the field of leadership, sales, marketing, and stuff like this. And then I have another company that is doing the investment training. So these two companies are producing a lot of profits for me. And then, of course, I invest a lot of money, and I'm investing in it in the same way, with the same allocation as my clients. The same allocation that I have. Also, my clients, that have the same age and so on, they have the same allocation. So I'm also making a lot of money. In the last 2 years, let me just give you an example. In the last 2 years, S&P 500 went up by a bit more than 50%. I think it was 51% in the last 2 years. Our portfolio went up by 162% with buy and hold strategy, no trading. Buy and hold. Why? Because we were invested in stock index funds. We were invested in technology index funds. So these are the technology stocks and stocks in general. But we also invested 10, 20, 30% of our portfolios into the crypto market before the big boom, And these small investments in the crypto market went up 500%, 700%, 1000%. And this produced this overall amazing growth of our portfolios. So I'm constantly on the lookout for new technologies, for new investment ideas, where we are basically getting into these investments before the crowd. That's the beauty of everything. We were investing. I started with my courses in 2012. Okay, that's almost 10 years ago. But already at that time, we invested heavily in technology companies. And that was an amazing move, for all of my clients that we were investing. And, you had a lot of these guys, who were scaring people, like the next year we will have a huge stock crash, and we didn't believe that. We didn't believe that. And I said to my clients, just invest in the stock market, And we were right, we were right. We have this cautiously optimistic view of the world. We are not pessimists, because if you are pessimist in the investing world, you will never even start to invest, and you will lose out on all of the opportunities. You will not be in the best opportunities. So we are optimists, but a bit cautious, okay? We are just a bit cautious, so that is why we are not going 100% in crypto, That is why we have stocks in our portfolios, we have crypto in our portfolios, and we also have a bit of gold, just a tiny bit of gold, and also a bit of bonds, So we are optimists. We believe that this world will survive. We believe that that companies will continue to thrive, in the future. We don't believe in the end of the world. Okay, so this is the important thing.